What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is July 4th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and for those of you in the U.S., a wonderful Independence Day. And I want to spend some time speaking to that independence, talking a little bit about the thing that many of us, including myself, are passionate about, and that is decentralized finance, and talking about living in a world in the next 5 to 10 years where you can be truly autonomous with your own money, with your own wealth, and have the best services at your disposal. As we've been talking a lot about DeFi, and as markets have started to really get excited about the topic, not only do I believe that there's definitely a lot of hype around it, but we need to get down to business and talking about whether or not we truly can do one thing that will take DeFi to the mainstream, and that is scale DeFi. A lot of people talk about privacy, a lot of people talk about increased functionality. All those things will come as time progresses, but one thing we really have to worry about is scalability. So I'm going to be talking about that as we go throughout today's video, some of the solutions we're looking at, as well as talking about the general market trends right now that we're seeing across the board. So I've got lots of things to discuss right after our quick sponsor. Our sponsor for today's episode is Bitpanda Pro. Bitpanda Pro is the secure European exchange for crypto to fiat markets. Bitpanda has been offering secure, straightforward, and easy access to the cryptocurrency market in Europe for over 5 years and wants to offer the same service to more experienced traders, users using trading bots, and other advanced clients like cryptocurrency businesses and institutional investors. With the steady addition of more and more crypto to fiat trading pairs, Bitpanda Pro has made itself a convenient, secure, and trustworthy exchange to onboard or cash out easily. Check out the link down below in the description to learn more. Alrighty, everyone, so taking a look across the board for cryptocurrency markets to start here, we can obviously see there are a wide range of different cryptocurrencies that are in no trend scenarios right now, again, between 1% to 2% to the upside or downside. But again, this market isn't entirely boring. If you've been focusing on the right plays, you can be doing very well in this market. One example is one of our top altcoin plays that we'd recently built a pretty strong position in, and we just talked about over the last few days, which is iExec RLC, or RLC, which is its symbol. 18.4% in the last 24 hours, one of the best performing cryptos in the top 100. Loopring as well, another kind of Ethereum-based scaling solution play, as well as I would almost call it a DeFi play in this case for what it offers, up nearly 17%. Ren, another DeFi play, up 16.5%. Quant, enterprise blockchain solution, up 13%. 0x, 10%, and many more down the line here doing well. Now, going over here, one of the top plays again, RLC, just to talk a little bit about the TA here before we dive into Ethereum. RLC on the weekly looking phenomenal here. This is exactly what we want to see. Ren continuing to climb up to that general range we've been looking for. If we take it here to the daily here, we've got our line that we're looking for going up towards around 2200 sats here sometime in late July. So I think that that's a reasonable target here sometime between mid and late July if it keeps going vertical like it is right now. And along with that as well, we've got a ton of different plays here. Tomo has been one that we've been watching. Tomo looks like it's breaking out. Lend, BTC going right back up to the highs here, not even giving me the 50% correction that I was looking for. So again, many plays doing very well in this market. If you're focused on the right plays, again, it can be very rewarding. Now, speaking to that, right, this is just the market aspect of it, guys. But I want to talk a little bit about the future of DeFi. And when you talk about the future of DeFi, you have to talk about the future of Ethereum. They are in sync with one another. I know there are many of you out there who are big fans of, say, Cardano, EOS, Neo, a lot of other different blockchains, many of which I'm a supporter of, or at least would like to continue to see developments. And I do try to keep as much as I can up to date with what's going on in the space. There's just honestly, when you get into towards the technical parts that don't really get talked about in the headlines, it tends to be that there's so much to keep up with. You're dealing with thousands upon thousands of developers in these different ecosystems, constantly going back and forth talking about what solutions are proper to implement. And Ethereum is probably the prime example of this, where you've got tens of thousands of developers who are contributing to the Ethereum ecosystem, who are either building dApps, who are helping to contribute concepts to the core framework of Ethereum, whatever it may be, right? And one of the big things that we've been following for some time, and many people in the crypto space have started to talk about, is Ethereum 2.0. This has been discussed about for a very long period of time, but it's starting to get more and more important and almost kind of pertinent in this case about when are we going to be getting ETH 2.0, because this is not only going to provide a very positive market dynamic for Ethereum through switching to proof of stake, reducing the need for proof of work or a lot of the computational power to secure the network, but outside of this as well, it's going to bring sharding and a lot of other solutions that are going to be able to bring a lot of scalability and throughput to the main layer of the Ethereum network. And this does come with security concerns and things of that sort that we have to worry about. But obviously, the question is right now is not so much about security, right? ETH's hash rate hasn't really gone up over the last few years. It's maintained relatively the same, and it's been secure. So security is not really what people have on their mind right now when it comes to Ethereum. The question that people have is whether or not scalability is going to get better. Because if you take a look at the ETH gas fees right now, whether you're taking a look at the median or the average gas transaction, especially as DEXs and lending pools like Compound and Celsius and all these different platforms become more and more popular, it's going to get more and more expensive to do these types of complex transactions on chain and on the mainnet. So as we're talking about more and more of these actual DeFi applications taking off and seeing gas fees rise up, are there any kind of things we can look forward to be more optimistic about the future of DeFi, right? I don't want to be realistic about it, guys. I have to be realistic in stating here, right? Taking a look at the recent blog post, this came up from Danny Ryan from the research and development aspect of the Ethereum Foundation. This is on the official Ethereum blog. And they talked early in June about where the current state of Ethereum 2.0 is. And quite frankly, this is probably one of the most bearish things that I'm currently feeling right now about DeFi. It's one of my biggest concerns as someone who has a business that's basically built on Ethereum as we speak. And that is the sheer fact that it's going to take a very, very long time in multiple phases to fully implement ETH 2.0. So going through the article here, again, I want to make sure you guys spend the time to read through this a little bit so you have a better understanding of it. But again, this has been talked about for some time, and ETH 2.0 still hasn't been integrated. So there's a few different phases to understand about this. So the first one here is phase 0, or the beacon chain. It's the core chain of the new consensus mechanism. So this is basically going to be the first initial steps here towards moving towards proof of stake. And this is going to be important because it will provide, in the short term, possibly some forms of scalability. But outside of that as well, it's going to start to remove the traditional consensus mechanism that we've known about for all these years through Ethereum. So again, the beginning stages here of ETH 2.0 starting to go through in phase 0. And after phase 0 comes phase 1. So this is going to be basically breaking up the Ethereum network into shards. So we're looking at having 64 shards, and basically, to put this in very simple speak, sharding is a way of almost kind of fragmenting the security of a blockchain into a variety of different clusters. So let's say, for example, you have an entire network of 64,000 different validators, right? Different nodes on the network who are staking, right? Basically, the way that would work, in very simple speak, this is probably oversimplifying it, you would basically take 1,000 pairs of thousands of validators and you would put them into each shard. And each of those shards would deal with 1/64th of the network traffic, right? Or keeping and storing a certain component of the chain. So it not only weighs down the storage capacity that people need to have, it starts to make it much more practical for people to be validators rather than having to store hundreds of gigabytes, and eventually it'll probably get to the point where we have tons of terabytes that people have to actually keep on their computers. And outside of that as well, it allows for more network traffic. That's the real benefit here that ETH 2.0 is really going to provide, as well as that with a combination of proof of stake. It's going to be very beneficial here for blockchain networks. So this is, again, what people are really talking about. There's obviously the benefit to staking, things of that sort, that's going to add probably a lot of value to Ethereum. If you hold a lot of something and you're not seeing people sell it on the market because they're holding it to get that yield, then it's going to entice more people to hold it, and therefore it's going to provide a positive pressure for the supply and demand side of Ethereum's price, basically meaning prices are going to go up for Ethereum if everything plays out properly. So this is why people see ETH 2.0 as a very bullish thing on a purely kind of speculative investment portion. But also on a fundamental aspect, this is going to be very important for Ethereum to actually continue scaling out DeFi, right? So I can tell you guys, people are extremely excited about DeFi. In the first 2 weeks here, I wanted to mention this to you guys. In the first 2 weeks, we got over 5,000 unique wallet registrations through the Digifox app. And people are depositing money on Compound. People are using more CeFi services like Celsius and earning interest on their stable coins. People are making DEX trades. We've got thousands of dollars of volume being traded through these DEXs on a brand new wallet. And then also, again, hundreds of thousands of dollars being deposited into lending pools. And this is really exciting to see, especially for a new company like ours. It's been incredibly awesome to see that we've been able to play a role in this. But speaking to the broader space, the big concern we have, as well as our users and other people who are fans of DeFi, is how do we get those gas costs down in the meantime? Because if this doesn't happen, right, not only is DeFi going to stop breaking records like it did just back in June, right? We had great volume growth in the Ethereum space, even as we've started to see a major decline here and a lot of game and marketplace activities in regards to Ethereum, right? This was the big thing, gaming and, dApps and things of that sort. More than anything, we've been seeing an expansion of decentralized finance, right? And I think that that's a much more practical, mature, and more in-demand use case, to just be realistic with you guys, if you want my opinion. But taking that into account, if we don't make it where some of these complex transactions that require a little bit more data, start to become a little bit more cheaper, right? If we stop prioritizing features that are going to make this more practical, DeFi will move off of Ethereum, right? This movement right now is highly in demand of bringing down costs, right? And this is the kind of petty arguments. This is what I don't like about, I know people argue about scaling solutions a lot, especially this was a big topic when it came to the traditional fork of Bitcoin, when we had Bitcoin and Bitcoin Cash, and of course the endless amount of forks that came off of Bitcoin Cash as well. But I really think at the end of the day, the problem that I see here above all is that we're very impractical, that we say, full blocks are a good thing, right? Or, $20 fees are normal and expected, and the user should pay that, or someone else should pay it. That's just simply not true. If you want these networks to actually succeed in the long term, right? Even though, for example, price may have gone up during these times when fees were high, don't accustom high fees as a benefit for people to actually use these networks. It's not. If I have to pay $40 network fees just to place a trade on a DEX, I'm probably not going to use it, right? And that's probably not even including a fee that the platform's going to charge themselves, right? So this is the key thing to keep in mind here. We need to actively be working towards reducing fees, increasing privacy, increasing functionality, constantly setting higher standards for ourselves. And I think that there's a lot of great layer 2 scaling solutions for transactions, like me sending ETH to someone or an ERC20 token. That's not really the concern here. The cost for those transactions, yes, may be pricey if you're sending $5 of the crypto. But again, most of the time, if you're sending, a few dozen dollars or 100 or more in the form of crypto, that's not really the concern, right? So again, it's good to see free transactions and or near free transactions and instantly settled transactions on layer 2 solutions. But we need to find ways to be able to make more complex transactions, trades through DEXs, deposits into lending pools, where there are token swaps going on. It's a lot more data and it's a lot more costly. And if DeFi can't do this, or if Ethereum can't do this more specifically, DeFi will certainly find a new home with a blockchain that has a similar code framework where you can port over your dApps. I know that Energy, for example, has done this, the Energy blockchain. They've combined not only the treasury model from the Dash network, but also the smart contract and decentralized application framework that Ethereum offers into one single platform, and you can port everything over, right? Ethereum, its code is open source. Someone else will be able to build that platform if Ethereum does not do it soon and not start moving on this quicker than they are right now. So anyways, I'm just saying that, again, it's an opinion I hold, and I know, as you all can probably tell, I get quite opinionated over it. But again, as someone who's operating a business in this and is playing a part in trying to scale out DeFi, it's one of the biggest frustrations. But I'd like to hear with you all what you all think, because there's a lot of EIPs, there's a lot of solutions out there. There's layer 2 scaling solutions, there's EIPs that are looking to restructure how gas fees are charged and remove some of the marketplace dynamics from the fee aspect of fees on Ethereum and other blockchains. And also, of course, we've got ETH 2.0. So what do you guys think? What do you think is going to be the ultimate kicker here that's going to make DeFi practical? Maybe it's not even scaling. Maybe you guys have something else that you're looking for before DeFi really takes off. It could be privacy or some of those elements we mentioned earlier. Anyways, that's it for the video, guys. Thank you all so much for watching. I want to get that discussion going. So if you like this video, drop a like, drop a comment as well about your thoughts down below if you have something to say. But all in all, I hope you all are having a fantastic day. Enjoy Independence Day for those of you in the US. I'll see you all in the next video. Stay tuned.